What's up, guys? Welcome to another video with Freddy the Fish. So this video is special. This was a request from one of my followers. Where is this person at? Notifications. So you guys can thank Miles May for this video. I'm sorry, yeah, Miles Mays. I hope I'm saying that right. Asked me, said, can you make a YouTube video on how you read the orders coming in on the tickers? And I responded back, great question. Since you asked, yes, I can. Stay tuned. Sometimes, guys, all you got to do is ask. And not many people are going to do this. I think a lot of people kind of hold this tightly guarded secret on how to find what I'm going to show you right now. But honestly, there's just so much money to go around. There's really no point to do that. So what I'm going to show you guys, I had to really pay my education, I guess is the best way to say it. If you don't know something in this industry, you pretty much have to pay for it, and you have to pay people to teach you. And sometimes the only way to do that is by buying their service. I've been in this game since the penny stocks with Tim Sykes. When I had zero clue about what stocks were, I joined penny stocks with Tim Sykes. I think I paid like $1,500 to join that Discord, not even Discord, but just that chat room. In that chat room, I remember when I was trading with Tim Ducks before he was Tim Ducks. He was in that chat room right there trading, and he was making like $5,000 days, $10,000 days, $15,000 days. For all you guys that are wondering if that dude's real or not, that dude's real. That dude was trading in the same room I was trading in a long time ago, except he excelled. He became a somebody. So I say that because you have to really pay for your education in this game. Nothing really comes for free unless you find someone generous like me. I've been a part of several different groups where the head trader is just really, really smart. And I've learned a lot of different things, which is kind of how I got to where I'm at now. I'm nothing big, trust me, but I can put some profits on the board. So when it came to how to find the right orders, I also had to pay for a service where these guys were sharps at really finding large transactions that were meaningful. And so by observing and just trying to reverse engineer the transactions they were finding, I was able to finally find meaningful transactions that I can find on my own now. So this is going to be a great video right here. It's going to have a lot of free information that can take you years to figure out. So I'm going to do my best to make it as clear as possible, not make this video drag on forever. But at the same time too, there's not really a shortcut for this. This is something that it just takes a long time to master, and you just got to keep doing it over and over and over and practicing it to get it right. So to answer your question, Miles Mays, I hope I'm saying that name right. It pretty much comes down to finding high, like aggressive options flow transactions, and then seeing if it matches with my Fibonacci tactics. As you guys see, I promote my book. That's my main style trading, Fibonacci. And the reason for that is because these institutions trade throughout the Fibonacci sequence. They move stocks from one zone to the next one. They're the ones that actually create that transaction, that move, right, with that big money. So the first part is understanding how to lay out the Fibonacci, which you guys have seen a few videos. My book is on the link below. It's on my profile. So that's really good to know because, for example, right here on this NVIDIA trade, right? When NVIDIA fell down into this zone right here, I already knew that this was a high demand zone. This was a golden zone right here, Fibonacci golden zone. And I knew it's in play. I knew it has strength, but I needed the market to confirm that first. I needed the market to confirm that by holding the price there. And number two, I needed for the whales to confirm they're going to push it higher by seeing transactions coming through to prove to me that we are going to make that bounce from here to the next Fibonacci golden zone. So for example, like when I see a pattern like this where the stock falls in here, they buy the dip. You see this green candle right here, followed by the next day the price sells off right into the same Fibonacci zone. Those buyers buy the dip again, but it's not an aggressive buy, it's more of like a defensive buy, right? They're just defending this same zone. And what they're doing is they're defending their purchase right here. Now that's enough for me to take a trade, but it's even nicer when I can see a transaction come through on flow that says they're targeting 135 or like 140, which are the next pivot zones, the next golden zones. So that's kind of the gist of it, right? And I'm just gonna kind of bounce around here. Um, Another thing too is like also confirming that with the gamma zones. If it all lines up, then I kind of know I have something there. It's worth taking some risk on. So one of the main ingredients to all this, to finding some meaningful order flow, is I use the unusual whales. I think unusual whales is one of the most powerful tools to when it comes to finding big orders. I know there's a lot of different services out there, but I do think unusual whales is the best one. I've pretty much used all of them. I've used Tradietics, I've used Black Box. I've used a lot of them, guys, and I always come back to unusual whales. They definitely dominate it, and they've been a really good friend of mine. Just in the sense that they always provide me with value, and they're always updating their platform to give you even more bang for your buck. So the first thing you want to do is you really want to have some nice filters right here on your flow feed. So for starters, there's already these preset ones right here. On the preset ones, one that I started off with was the big trades on the ask. So right here on the big trades on the ask, when you're reading the order flow, unusual whales, like every other service out there that comes to like giving you some call flow, put flow, and all that service, you want to be able to ignore the majority of it. The majority of the stuff you see on your screen is going to be noise. And you want to learn how to just pick the actual meaningful transactions, which means you have to have patience. You have to be okay not taking a trade. You have to be okay just kind of sitting down and just watching the flow. And eventually what happens is you start seeing the same name come up, you start seeing the same transaction come up, and that's when you can start picking off these whales when they're actually trying to target a name. They're trying to target a move. Then from there, you have to do some more digging and seeing if what you're seeing is actually what you're seeing, and I'll get into that in a little bit. So for starters, like I said, one of those is the preset one right here, big trades on the ask. And I always switch everything to premium because I only want to see the most meaningful transactions, and the most meaningful ones most of the time are actually be the ones with a good amount of money. Not necessarily the most amount of money, but the ones with a good amount of money. So just going through, like for example right here, the big trades on the ask for today. Today's the 24th. You can already see, for example, like these pop up right here. See MO, they were buying on the ask 50. This one right here, maybe not so meaningful because this is an in the money call. The price is 53, they're buying the 50, they're already buying $3 in the money. It's not really what you would call an aggressive trade. They're just kind of buying in the money, trying to capture some more money on MO, but there's definitely a lot of money right here. So I always just like to look at it to see what they're trying to do. So here's a chart, Altria. So they're playing it pretty safe if you think about it because they're buying in the money calls. Here's the 50. They're pretty much saying that the gap is not going to close, that the price is going to either stay around here or it's going to appreciate from here. They're going to try to make money off of it, but they bought a deep in the money call. So that's like something I'm not really looking for that. I'm looking for more out of the money calls, and we're going to get more into that in a bit. But this is a good place to start right here, and you can fix like right here on the side. You want to keep it on the ask. I don't look at the bid. I don't look for transactions that have on the mid, on no side. I want to look something that has ask, is on the ask, at least 60% of the order is on the ask. I'm looking for things that are aggressive. I don't really care for like the ETFs, the indices, the ADRs, so I just look for stocks. And on the premium, this one I think already comes preset to 500,000 on the premium and the size at 500. And that's all stuff you can take, but just keep in mind, if you reduce these numbers, for example, like the premium, you start dropping it to, let's say, 100,000, and you're like, well, size, I just want to see, let me even see size of 100. What you're trying to do is you're trying to see like every transaction coming through. And the point of trading is you don't really want to take more trades. You want to take more meaningful trades. So it's not about seeing more, it's actually seeing less on here, but stuff that's more meaningful. So on this one, it even puts like the volume to open interest ratio at 1. I don't really mess with that. It's got out percent out the money to -1. Like I said, like we want to see at least like 2% out the money, so you can change that to 0.02 to this one's infinity. So now you can see on your right here percent out the money. Where is it at? Size. Oh, I don't even know. I'm not even seeing it. But anyways, you want to see at least stuff that's 2% the money. It all depends on your trading style. Sometimes some traders want to see stuff that's 5% out the money. If you want to see like a really aggressive trade, 10% out the money. It's all depending on you. And then on this one, this is all preset. Keep in mind, it says volume is going to be greater than open interest. It's a single leg only. It's going to show you aggregated trades. So aggregated trade is this right here. So for example, this transaction, it says that they bought, let's see, a $60 call. They're targeting it for January 17 contract. There's 23 days left on this, and they bought it for an average of $1.65. So the open interest on this was 1,742. This whale bought 1,828. So there's a good chance that this is what's called an opening order, meaning he's buying it instead of selling it, because you can't sell more than like what's on the open interest right here. So because there's more on this order, 1,800 versus 1,700, this is most likely an opening order. But when it has the aggregate trades, you can actually click on this and you can kind of see like all the transactions that went in on this. So you see a lot of orders that went on the mid right here, some were on the bid, and then here's the one that were on the ask. So now you can see this whole entire order right here, how it was broken up into the system. And that's nice to see that, because at a glance, all you're going to see is, for example, where was it at? The one we were looking at right now. If you just look at it, you're going to say like, oh, for example, right here, MCHP 60, right? That's the one I think we're looking at. 60, you're like, wow, $302,000, 87% of it on the ask. That's so cool. It's a strong transaction. But once you look at it, you can kind of see like, okay, let's see what really happened. There's a bunch of orders being filled in the middle, 11K, 2K, 5K. Total was 302K. So you want to kind of see like how aggressive was this order. So here are like the bullish ones, right? You have 1K, 1K, 2K. $17,000 here, 30,000, and this is most likely the same whale, but the order just got split into like 1,000 different pieces. So let's just say, for the sake of this video right here, I was interested in MCHP. Off this screen now, I can just type in like MCHP, and I can see how many orders targeted this on this screen today. So I can see there's just one $300,000 premium MCHP. They're targeting the 60. So the next part of that, like I said, is just to make sense of it. So MCHP microchip. Oh, interesting. I already have this thing charted and everything. Well, look at that. So this thing is landing on the actual Fibonacci golden zone. I must have been looking at this at some point because I already mapped it out. But this is why I say the importance of knowing like Fibonacci and how to identify these golden zones, because they're pretty much like pivot zones. They're bounce zones. So when a stock lands in it, and then you see this get triggered right here, you see orders like this get triggered, it's like, okay, like they are trying to create the bounce. These are the guys that create the bounce. So if you look at the 1 year, 1 day, we can see that the stock landed in it. Then you have unusual whales orders getting triggered, and they're trying to push it to the 60, which makes sense because that's like the low end right here of this candle. So that would be like a little supply zone, because the supply zone would exist about right here, right? That would be the supply zone right there. So that's the kind of trade that makes sense. I personally wouldn't take that kind of trade only because it's not too aggressive compared to what I'm looking for. But this is just kind of to give you an idea how I find my orders. So let's go back over here. So that's one screen right there. Then you can customize your own screens too. So I have, like, for example, I have heavy ask. Heavy ask, if it's not messed up. I have a program to only show me transactions on the side, on the ask. Once again, on the ask percent, I want it to be at least 60% on the ask. I don't really want to see stuff with too much on the bid because that's not really an aggressive order. I only want to see stocks. For this one, I want to see transactions with a premium of 100,000. I want to see the size, the amount of contracts they bought at 10,000. Days to expiration, I don't want no more than 200 days. Let's see, what else? On this one, I only want to see out the money, and I also want to see aggregated trades. So there's different things you can look for, and there's plenty of videos, guys, on YouTube from the actual unusual whales makers themselves, and they have some pretty cool screens that they show you for free right there, how to set up. And for example, this screen right here, yesterday flagged Tesla. There was $12.1 million going to 482.50 calls. It's showing that 99% were on the ask. This has a 9-day expiration, so this is like a very aggressive trade. We can click on this right here and just confirm that. And we see that there was $12 million on the ask for 482.50, expires in 8 days. But then there was also 26 million, and this was on the bid, and they were selling the 455 call. So this is a trade that has like a multi-leg. So you can see 1, 2, 3, 4 different things they were doing on this trade. This could potentially be one whale, and maybe this one right here, or this could be an entire, like, this could all be one whale trading a 4-leg trade. So that's, once again, that's not really something I'm looking for. I want something that's more clear. Here's an FCX trade. I posted this one on my Twitter a few times because this is a trade where I've seen whales hitting the FCX on the tape a few times now. They've been doing it for a few different days. They're building a position, and they're going in with like 700,000 to a million to, like, today, 5 million at a time, which means they're filling an order because they're expecting a really big move, and they also have a very big order to fill. So it's going to take some time, and these are the kind of things I'm looking for. So like on this one right here, if we check it, here's something else that I look for. So when you open up unusual whales, like a transaction just like I did, I want to make sure it looks clean down here. And what I mean by that is that I can tell that this was an actual transaction that a whale opened, and he's not just closing out an existing order. So for example, on this transaction that I just showed you guys right here, FCX on the 45 call, right? Mind you, this was on the 23rd. So one thing that you really want to make sure of is that these transactions go into open interest. If you take this trade the day of, you're risking that this whale is just going in and out and trying to snipe a move real fast. So instead, what you should do is you should wait for the next day to make sure it carries over into open interest. So on the 23rd, you can see right here on the volume, there was 26,230 calls that were bought right here. So a lot of traders will just take the trade on that day, but they won't wait for the next day to confirm that this moves over to the open interest. And it tells us right there that out of 26,230, 25,352 carried over into open interest. So if we go back to the order right here, this whale bought 21,563. So I think it's pretty safe to say that all of that whale's order, he left it open right here for the next day. And that shows us that this whale is building a position, and he wasn't just day trading this contract. Now, you want to save this contract too, because you want to keep track of this contract. You don't want to see the whale exit. If you see, let's say on the 26th when the market reopens, or on the 27th, or even next week, all of a sudden you see minus 25,000 right here on the volume, well, it's pretty safe to say that this whale most likely now got out, because that number matches his transaction right here. Or what he'll do, he might exit in chunks. He might exit at 5,000 one day, 5,000 the next day, 5,000, or in 10,000. So the other part to understanding flow is you want to see that the whales remain in the trade and they don't jump out. So here's another one that I've been talking about too, Johnson and Johnson. This is from the 23rd as well. So there was an order for $4.82 million. If we click on it, we can see that if you go back on the open interest, you can see that there's only been about 1,400 to 1,500 open contracts. And all of a sudden on the 23rd, here comes a whale and he slams 13,480 contracts. And once again, we want to make sure that that order transfers over into open interest, meaning that that whale did leave that money sitting in there, which means this whale has some kind of privileged information. He knows of a move coming, or he might just have strong confidence. But if we're here on Unusual Whales, we usually know that these whales have some privileged information, and that's the reason why we're even following them. So 94% of this order was on the ask, which is pretty bullish. We can see the average price that were paid for all these contracts were $4.11. And we can see the following day, out of 13,480, 13,226 crossed over into open interest. So I think it's very safe to say that this whale is in the trade and they are in it for big, because this was just one order for $4.82 million. And I've already seen a few other orders come in throughout the week for smaller amounts. So once again, this is indicative of a whale that's building an order. This whale is pretty aggressive and they are getting set up right now. So the other part to that, like I said, is you got to pull up a chart and ask yourself, does this trade make sense to me? Because if you don't understand the trade, you're kind of just following blindly. And while it might work sometimes, you really want to know what you're getting yourself into. So here's the chart, and I used to have Fibonacci on this, but I'm gonna keep this very simple for you guys without having to lay down Fibonacci. If we just take the highs right here, okay, so that would be a supply zone right here. That would be a supply zone. Then the stock broke that right there. So now this is going to become a support zone, also known as a demand zone, which tells us that if the price falls back into this in the future and whales are aggressive, they want to actually buy the name, it means they're going to buy the dip on it. So it's safe to say that they are buying the dip where they should be buying the dip. You see how that makes sense? This is old resistance now turned into support. So just like right here, the stock Johnson & Johnson dropped for 1, 2, 3 months. It stayed at the golden zone. And finally, on this month right here, on I think July 2024, they made it rip. Well, I bet you if we went back to July of 2024 and if we saw the order flow on Unusual Whales or whatever you use, I'm sure we would have seen orders coming in that were targeting 150, 155, and 160. So now we have confirmed that the price is at a Fibonacci golden zone. We know that whales should be buying there. And then we go over here and we confirm that whales are in fact buying and they are targeting a higher target. So in this case, this whale right here is targeting 155. Well, what's going to happen from here, the stock is most likely going to go to 155 because 155 is the bottom right here of this this zone right here, this structure. You see that? That would be the next supply zone. So which leads me to the other part. Another part that I use to confirm these moves that they make sense is we have Fibonacci, right? We have the aggressive call flow. And then on top of that, there's another cool screen that Unusual Whales gives you, and it's right here on Ticker Explorer, and then you go to Gex, Dex, Vanacharm, but we're only going to use the first two. So if you stay on this one, I think this one, I want to say it defaults to this right here. But if it doesn't, sometimes it might be sideways. You can always change it. And I want to say, yeah, I don't know. Maybe I'm looking at, oh, here we go. Yeah, I think normally it defaults to this right here. So what I like to do is I like to switch it to bar because I believe the price moves up and down. It's much easier to read this way. So these zones right here tell us pretty much where the stock is going to move in either direction. So because we're seeing whales target this to the upside, we want to see where is it going to move to if it moves higher. Well, the first place it's going to go to is 263, and then from there it's going to shoot up to this one right here, this biggest one, 68. So, and we have 65 in the middle. So you can see that they're targeting the gamma strike in the middle. That's going to be the next magnet they're moving to. So it makes sense right here on the gamma field. Then it makes sense right here on the Fibonacci, you know, by the dip, support zone. So all this is making sense. Then on top of that, we have a transaction, which was the other screen, where it makes sense. Now I know that I feel comfortable taking this trade, and there's a good chance that this trade can happen. And that's pretty much how I identify trades. So if we go back up here, let's go back to my flow feed. I have a few different screens. There's for example, this screen I believe has orders that are single legs. So this one only tracks trades that have like one type of order. It doesn't have like one order that was sent as a bid, then one order that was sent as an ask, and maybe one that was sent in the middle. It gets rid of all that. And once again, like you want to sort it out to where it shows you the highest premium. This video's already been going on for half an hour. Oh man, see if you guys are still even watching this. So like today, let's see. Today for the premium, we had a few big ones. So you can see like, for example, AVGO right here. There was a put buyer that came in for 1.2 million, 86 days out. We can click on this right here and we can see that, yeah, the majority of all these transactions were all on the put. So this whale is targeting a move to the downside, I think, because I forgot what the price is on AVGO. And you can see the majority of them were bought on the ask. That's the green right here. And that's what you want to see. And you can see how all these orders, look at that. These were like the big chunky ones right here. But this is the whale. This is all the whale getting his whole entire order filled. Because they have to go through so many different channels to get these orders filled. So let's say, for example, if I was targeting this move, AVGO, I want to make sure this makes sense right here. And you can see right here, the open interest was already like at 3,000, 3,000, 3,000, and today it was 1,180. So let's see, AVGO. Yeah, so this one right here, the order that came in is actually smaller than open interest. So you kind of want to be careful with that because this could be the whale just selling his way out of this transaction. AV, let me see. AVGO. 1 year, 1 day. Yeah, 220. So that could be the whale actually targeting this, or it could be him or her closing their position to 220. And that's what you want to make sure that it's clean on the open interest side. Like, let me show you guys another example of a clean one. Let's go to this contract right here that I saved. So if we go to like OKLO. This was a trade that I was in. I got out today, but let me show you guys why this is a good example of what I'm trying to show you here. So I can see the pattern, right? We have this descending wedge, right? We have this triangle, and we have this clear base that was created by the Fibonacci. So that was two measurements from here and from here. And this is both of them in the 50%, and it's identifying this Fibonacci golden zone right there. So I know that's the base they're using to take trades off of. So when this move happened right here, there was a bunch of OK low transactions that got triggered for the 25 and no, I'm sorry, actually 26 and 27 calls. So now it makes sense, right? They're being aggressive. They're going to save the dip, and then they're going to rip it up. And so that's why I announced it on Twitter. I posted this trade, and I gave it to you guys right here, and you can already see for 1, 2, 3, 4 days they've made the price move in that direction. And it looks like they're going to make the move all the way to this supply zone right here, which once again is another Fibonacci zone. It's 78 through 88, and this is where they're going to unload, and they're going to just do this whole thing all over again, right? But they might drop it down to here now and then rip it up even higher. So that's the importance of learning Fibonacci, is you can kind of see what zones are just bouncing it off of. And all you need to confirm is that call flow or put flow if you want to short this thing. So if we look at the OKLO contract, I saved it. You can see, look at this. So December 10th, right, only 530 contracts open. It was just under 1,000 contracts open, and then on the 18th, a whale steps in and buys 4,365 contracts, 85% of them on the ask with a 1.79% average. We know that that whale stayed in the trade because it carried over into the open interest. At least 3,400 of them did. And then from there, we can see that the whale jumped in again and added to that order because the open interest jumped from right here. You can see the transaction on the 23rd. They bought 6,700 more, so they added. And from that, 5,024 carried over into open interest. So now this whale has accumulated position close to 10,000 contracts targeting the 26th call for January 17th. And if you can see by the pattern, the price is slowly going in there. So you ask yourself, once again, does the transaction make sense on unusual whales that I can tell what it's doing? The answer is yes. It's very clean. We go from nothing to now the whale jumps in, carries over into open interest. The whale stays in. The whale's now adding more. We can see that carries over into open interest too. And then we go to the chart and we say, does that make sense? Well, yes, the stock bounced off the base, right? This is when the whale started triggering orders. You can see that's the 18th. That was the first transaction we saw. And then this whale is so adamant about making this move happen that he's going to keep shooting more money at it until the move happens. And that's how these whales ensure that their money works for them, right? They don't just throw in $100,000 right here and then they just don't do nothing. They continuously keep pumping this thing. They continuously throw more money to create that pattern, to create that move that's going to also have the rest of retail jump in and also add their funds because now they're confident of the pattern. And that's how these things happen. So as the move approaches the whole 25, 26, 27 area, it wouldn't be unusual to see the whale start closing his order because now he's going to start taking profit. And most retail is going to go ahead and stay right here and they're going to keep adding into the highs while the whale is actually jumping out of his position, already capitalizing on his trade. And that's why it's good, like I keep saying, it's good to know these Fibonacci zones because as the price is approaching the Fibonacci supply zone, I already know what's going to happen, right? We're going to see one of these moves. We're going to see one of these moves. We're going to see one of these moves. It's going to be just history repeating itself all over again. And when you can identify these zones, that shows us where this whale is going to start taking profit. If not, start triggering orders for buying puts into, for example, the 21 and 22 area because this whale is going to go ahead and create the reversal type pattern and he's going to move it back into this zone right here. So once again, like the whole foundation to my entire trading is all of the Fibonacci that I've learned throughout the years that I wrote my book on, that I try to explain to a lot of you guys the importance of it, because then from there on, we can just confirm, is the whale making the appropriate move to take the stock from point A to point B? And if that money makes sense, like these transactions right here, then there's not really much of a secret. There's not much of a hindrance, in our mind that's going to block you and be scared. Like, oh, I don't know, should I take the trade? Should I not? Because it's clear what they're trying to do. We can make sense out of it. So I hope that made sense to you guys. I know it's a lot. I could go on for another half an hour just to do one more example, but it's a lot of work. It's a lot of in-depth research on the flow, the gamma. Like if we selected the gamma on this one, we would see that the levels he's moving it from are going to match my Fibonacci and they're going to match the transaction that he's doing. So let's change this over to OKLO. And you can see that the price is going to move next to the biggest GEX zone, which is going to be at 25. So if we go back to the chart, 25 is right underneath, and we should see the biggest GEX zone around here, around 26 to 27. We should see the highest concentration of GEX. So let's go back over there. There you go, 26. See, 25 and 26, literally the highest concentrations. And if the stock were to hold above 26, now we know that it would shoot all the way up to 30 and 50 cents, or just actually no, $30. But before that could happen, you would want to see the whale once again pushing orders that show you he's targeting the 30, which would be up here, right up here into the 30. So if the stock is right here and you're not seeing call flow coming in for 30, well, guess what? That whale is not ready to make the move to 30. He might take profit, let it just fall over, and then he might find value again here and start targeting the 30, start targeting the 25, 26, and then 30. And that's just kind of how this goes right here. So I kind of hope that helped you out a little bit. Miles Mays in identifying how I find order flow. And that's really a good place to start right there. Like I said, Unusual Wells themselves, they put out a lot of good videos on a lot of good screens. And a lot of traders are going to keep this information just very guarded. And what they're going to do is they're going to sell you on a service instead on how they find their picks. And I'm not talking crap about them because some of those guys are really good. They're sharps and they really know how to find the transactions. So just be mindful of what groups you guys do join. Not all of them are the same. So do your research on some of those. You guys can DM me and I'll give you some pointers on some good ones. I don't want to put on this video, but just DM me on the side and I'll let you know which are some good ones. Well, this video has already gone on for 35 minutes. It's gone on pretty long. Let me know if you guys like this content, if this was helpful, and if you guys want me to do another deep dive into like another type of name. And I'll do this whole thing all over again with a different type of transaction, so that way you guys can really learn this going into 2025. All right, guys, I hope you guys enjoy your holidays, and I'll see you guys on the next video.